Hi, and welcome back to the ghbond channel. Today we're going to talk about trade ideas for this lousy market we're in right now. Again, these are just my thoughts, and if you want to take some of them under consideration for your own financial planning, that's up to you. I don't recommend anything in here for you specifically because I don't know your personal circumstances. So either figure it out yourself or you can consult with a financial advisor who does that for a living. So today we're going to talk about three different types of things you might want to consider buying in this particular bear market. First is bear market exchange traded funds. So you can pick your S&P or your QQQ, which tracks the NASDAQ, your tech stocks, and you can buy ETFs that have 1, 2, or 3 times leverage in both the positive and the bear direction. For example, I often buy what's called SDS, Sam David Sam, which is a 2 times leveraged bear market S&P. So if the S&P goes down 2%, my SDS ETF is up 4%. So it allows me to make money in a bear market. But we're really not going to get into much detail in this video on that strategy. Just be aware that it's out there. Second thing is oil and materials stocks. We're going to discuss oil stocks a little bit today. As you know, the current Biden administration hasn't been very friendly to oil exploration and drilling and pipelines, and we are running a deficit of oil in the world, and the world's going to keep on growing in its need for oil. Now, you may think we're all switching over to wind and everything, but that's just not the fact. We may be doing some switching, but we're going to continue to need oil to manufacture all of these things, to meet the growing world demand, and to mine all the materials that we don't have to build the batteries and other high-tech energy producers. In addition, we're taking nuclear plants offline without replacing them. We're in a situation where we need all forms of energy, and we're not really taking that seriously yet. So I think inflation in the oil patch is here to stay. Right now we're in a big pullback. It may be an opportunity, which makes this video very timely, to start looking at getting in when we see a bottom in oil. Because again, oil over time, even though OPEC has promised to pump more, oil is definitely going to be inflationary as we go forward. The third item is strong stocks. And we'll take a look at different ideas on strong stocks. But first, let's have a look at the oil patch. On Yahoo Finance, I like to use the comparison page on the full-size charts to look at different types of stocks all together on one screen. So here down along the bottom, we have this green line. That green line is the S&P 500. You can see we're down 22%, and this is on the year. What stocks are we looking at? We're looking at APA, Halliburton, WTI, and VDE, which is an ETF for energy. Now, looking at the behavior of these, the WTI is the most volatile. So if you're looking for short-term swings, it definitely has the most volatile swings, as you can see here, especially this last one. So that's the play for volatility. If you want to invest and hold for periods of time, I would recommend the VDE, or slightly better performance. You'll notice the purple and the blue line tend to travel pretty close together, and that's true over a number of time frames. So you can split between APA and Halliburton and buy them as a pair, and that way you'll get the average of the two, get a small amount of diversification. But I would buy them and sell them together as if they were one stock. So those are my stocks that I'm looking at. Currently, I have invested in VDE. I'm not currently holding any of these. So let's move on and have a look at strong stocks. Now, we might think of some of the strong names that we've known. And so on this particular chart, again, the green is our S&P, and let's take a look at a few strong stocks. One of them is Costco. Costco is definitely, you would think, going to be a strong stock with people looking to economize during the recession and taking extra advantage of those Costco prices. And you can see Costco has floated above the S&P and just dipped below, but it certainly hasn't been a performer like the oil stocks. Next up is Ford. You can see Ford was way up here. Ford got a big run on the EV interests, but Ford hasn't maintained its big run, and it's really hasn't even bounced when the other stocks have bounced. So we're going to have to look for a bottom in the future on Ford. Tesla. Tesla has been a darling, obviously, big in the electronic vehicle space, and you can see it did rally here in this point here, but Tesla again is underperforming the S&P 500. Amazon. Amazon's a big name. Everybody loves Amazon, right? Amazon also underperforming the S&P 500. So it looks like the traditional names in strong stocks are all underperforming the S&P 500. So are there stocks out there that are performing better than the S&P 500? We will take a look at some of those, but first I want to consider trading a couple stocks in bear market situation. Okay, here we're taking a look at Amazon. Again, everybody wants to own Amazon. It's a stock that's been strong. It's practically a monopoly. It's the type of stock that Warren Buffett would want to own. So looking at the chart here, we can see that it's sort of floating along with the S&P, and it's taken a dip. You can also see that you have opportunities when the S&P rallies. We have a small rally right here. We have a small rally right here, and we have a small rally right here. There's the S&P, there's Amazon. So we can look to play those small rallies, but I'm not here to teach you how to trade, but you can get in and out of those and make some profits in those rallies, even while the bear market continues on. Here's another favorite, Advanced Micro Devices. And Advanced Micro Devices also has these nice rallies when the S&P rallies. Another strong stock that people want to own. Obviously, there's opportunities to take these small moves to the upside all the way down in the bear market. So now let's take a look at stocks that are actually going up. Here we have a list of stocks that are actually pushing up on the year, and the ones on the chart are the ones with the long names here. The name is spelled out, it's on the chart. After we discuss these, I'll give you a chance to take a snapshot of this list. I'm going to start from the top. ADMA, Immune Products, strong top and bottom line growth. And ADMA is the light blue one, and you can see it's very up and down. It's a couple dollar stock, and so it's got some wide swings there. It's up 56% right now. I'd like to see it catch a dip down here to about 20% or so, or I could pick it up on a discount because I don't want to be buying the top right here, but definitely it's enjoying some strong growth. And all these are year-to-date charts. Next one on the list, CVB Financial Corp, kind of the other end of the spectrum. CVBF is the purple one here. You can see it's kind of steady as she goes there. It pays a 3% dividend, which is nice, and it's got about 12% growth on the year. Small banking stock. Next one is Halozyme Therapeutic. I really like Halo. Very strong top line revenue, bottom line profit growth. Great earnings potential. I guess it's undervalued, although I don't really worry too much about what Yahoo says about whether it's undervalued, because that can work either way. Next is Halozyme Therapeutic. Halozymes are red line. You can see it dip below the S&P early in the year, but then it's continued to climb up, and it's at 9.7% on the year, and it's got nice strong top bottom line growth and good earnings potential. Next on the list, Meridian Biosciences, Vivo. And Vivo is our black line here. Nice strong performance early in the year, and it's up 39.71%. So definitely the second strongest player if you want to take on some volatility. The last one is one of my favorites, WPC, WP Carey and Company. That's an REIT, Real Estate Investment Trust. Pays a 5% dividend. So the beautiful thing about that is if you look at WPC over, say, 5 years versus the S&P, it's generally beating the S&P 500. Very well-run company. The time it didn't beat, of course, was COVID. I don't think too many REITs did very well during COVID. but it is definitely strong here, not gaining a whole lot. You look at WPC, it's our golden line here. It's only at 1.1% on the year, but that's versus minus 22 for the S&P. Plus you get a couple dividends on top of that. So you're doing pretty well. And it should continue to hold. The only thing you have to watch, of course, is with the economy, as we start to get into more of a recessionary period, there may be some contraction in the office market where they do their business. So on any of these, keep an eye on the pricing. Those are the ones we're going to talk about, and I'll show you on the next page the whole list so you can take a snapshot if you'd like. Then we'll wrap up. So if you'd like to get more updates, be sure to subscribe. Also, to watch the previous 2022 crash video, click the button to the right.